They say property moves in 18-year cycles from boom, crash, recovery, and then repeat. If this is true, the last crash hit around 2008 and we're heading for another crash in 2026. So should we be concerned? And what really is the 18-year property cycle? The 18-year property cycle is a theory in real estate that markets flow predictable patterns from boom, bust, recovery over an average of an 18-year span. This is based on historical trends, particularly in markets like the UK, the US, and Ireland over the last 40 years. The cycle typically breaks down like this. Recovery phase 1. From years 1 to 7, prices are slow to rise after a crash, there's low confidence, there's cheap properties out there, and there is limited construction. Then you move to the boom phase, years 8 to 14. You have rapid price growth, you have high demand, you have more lending, and you have speculative buying, and you have an increase in construction. Then you're into the bust phase, years 15 to 18. You have oversupply, you have rising interest rates, you have credit tightening, and prices generally fall very sharply in a crash or a correction. And then the cycle repeats itself all over again. It is important to recognize that this is a theory and not an economic law, like let's say the law of supply and demand, or the law of diminishing returns, or the law of opportunity costs. The 18-year cycle is a theory, and there's a lot of things that can happen that can impact it, like in the real world, like real world events like COVID, central bank policies, even war. All of these can disrupt this cycle or throw it out the window completely. However, some believe this 18-year cycle is inevitable, and others believe it's only a matter of time before there is a crash. But before we all panic and make predictions, we need to ask some very kind of important questions in regards to housing. Is housing really overvalued? Are we in that boom period? And are we comparing the wrong things when we're looking at this? And are we missing some very important factors? And I think it's worthwhile digging into this 18-year property cycle to find out a little bit more. The 18-year property cycle is more of a theory than a law. It's based on real patterns in historical property markets in terms of what they've gone through. Generally breaks down as a 14 years of expansion followed by 4 years of a downturn. So if we are looking at the last crash in 2008 and going forward, we're looking at the next crash in 2026. And perhaps there is going to be a crash or a correction, and that's the theory. But the theory doesn't always match up to real world events, because economic theories rely on a lot of assumptions and market conditions remaining kind of constant or very similar. But economic law, like supply and demand or other laws, are called a law because they are hard to ignore, and they're based on thousands, if not millions, of past examples. I will get into that in a minute, but in terms of economics, law trumps economic theory. And right now, we're not at a point in that 18-year cycle in that theory where we are at oversupply. And there's a good case to be made that we're not even in a boom stage either. And there's not an increase in construction, and there's very little speculation happening within the market, unlike 2005 and 2007, where there was a huge amount of new construction and there was an awful lot of speculation happening within the market. We also have to ask, are we really in that boom period, or are we just dealing with a major issue with supply and demand? Yes, house prices have gone up, but compared to other assets that people use to store wealth, how do houses really compare? Bitcoin has topped 100,000, meaning you can buy a standard family home for 4 to 5 Bitcoins. Back in 2012, the same house would have cost you about 1,000 Bitcoins. Gold, an Irish house would equate to about 160 ounces of gold, similar to prices back in 2005. That's 20 years ago. Stock In terms of stock prices, the S&P has gone up by about 50% since 2020, where Irish housing is up about 35 to 40%. So if you're measuring houses not just against euro, but other values of wealth like Bitcoin, gold or equities, the prices haven't gone up that much, or they don't look that crazy. And maybe they're actually underpriced. And hence why a lot of investment funds have turned to housing for a store of wealth in recent years. In a normal 18-year cycle, you would expect that there's a surge in home building late into the cycle, right before there is a crash, and then supply overwhelms demand. But that's not what's happening at the moment. In Ireland, new home completions are far below what's needed. There's planning delays, construction costs, and developers can't even make housing stack up anymore, and many developers are just giving up. The same is true in many other global cities as well. So even if demand does fall, there's no massive supply of new housing to tip us into a collapse or a crash right now. In the past 18 years, they haven't really been normal. They haven't fit into your standard economic theory. After 2008, central banks printed more money than they ever did in history, and during COVID they printed even more. Interest rates did hit zero at a period during the last 18 years, and governments actually stepped into the housing market in a far bigger way. Big corporations, from pension funds to REITs to hedge funds, all got more interested in the residential sector after the commercial markets crashed in 2008. So what used to be local markets driven by local demand is now coming from the state and global investors. So the supply and demand drivers have changed significantly over the last 18 years as well. And the supply and demand law will trump the 18-year theory. So that question, is housing overvalued at the moment? Are we in that boom? Well, it depends on how you value it. If you are a buyer or a seller, and you're looking at prices versus wages, yes, affordability is an issue. However, we have more people working than ever. If you look at it from a price versus supply, maybe not. If you look at it compared to Bitcoin, gold or stock performance, housing looks kind of sustainable and it's more stable than other assets. In the end, we need to stop treating this 18-year cycle as a prophecy. It is a pattern, but patterns generally can be broken when rules change. And over the last decade, rules have really changed, and a lot of rules have been rewritten in terms of an economic point of view. So will there be a crash 2026 or beyond? Maybe, but I wouldn't bet my house on it. And I don't think we're due to have a crash because of the 18-year cycle next year. Because while economic cycles do matter, they don't trump economic law, and the law of supply and demand. Supply is tightening, demand is there, money is flowing, and people do see value in assets like homes, and people still need to buy and live in a home right now.